Okay, so let's get started. I want you to focus. This is a diagram that I drew a couple of years ago for my FxBootcamp class. And I want to just highlight a few things on here, not specifically all the writing that's on here, but just the arrows, okay? And I want you guys to think about how the money markets can work, okay? If we, in this example, look at that yellow line as being a daily swing, and we look at the pink as maybe being a 4-hour chart, and we'll look at the green as being, say, 15 minutes in this example. Okay, that's the time frames. That's how the fractal nature of the market works. Therefore, if I highlight, when you look at a daily candle, or swing, I should say, it's very important to understand that a daily swing, in most cases, will be made up of what on a 4-hour chart? Can anyone tell me? No worries, Money Magnet. It's actually a 4-hour, what we call move fit, okay? The 4 hours starts swinging its way up. I'm highlighting it in green. And then it actually starts swinging its way back in a downtrend. But once it reaches support in the nature of the daily swing, the 4-hour chart actually changes trend back to the upside and continues. Okay, that's how things are always going to work in the nature of the markets. Okay, so that being said, on a 4-hour swing, which is, we'll just highlight this first one down here in the bottom left-hand corner, which is now I've highlighted in green. What's a 15-minute going to do in the context of a 4-hour swing? It's going to be the same as a 4-hour, probably in relation to the daily, but a move fib down there. Okay, so let me highlight that. A 15-minute chart's generally going to start just swinging its way up, then get itself in a little downtrend, and then at support of that swing, then changes trend and off it goes. Yeah, you can look at that, Len. People will look at the same sort of thing. I don't look at Elliott wave theory at all, but it's, you know, you can sometimes see how people look at Elliott wave and go, oh, within the move up on the daily, we're at a wave 3, which is basically the shorter time frames doing their thing. Okay? So why is this important, or how this is important, guys? Well, when you're doing your analysis and trading, when you turn your charts on every day, you can go through all the fractals, or all what I call fractals, or your daily, your daily chart, your 4-hour chart. You can see where you're at support and resistance in these fractals, and then trade plan accordingly. Okay, so for example, if you came into trade one day and you were down here, where I'm putting this blue box, and you looked at your 4-hour chart and it's swinging up nicely like this in a nice trend. Remember, we always want to trade a trending market. Okay, and then you get a 15-minute chart, the green arrows looking to change trend in terms of price action in that area. At support, you can trade plan a long, can't you? In the direction of the 4-hour chart and all that sort of good thing. Likewise, if you came into your charts and you saw that you were at a daily support level, and there's a 15-minute change of trend going on, you could trade plan an even bigger long based on the fact that it's this big swing here at support, and you can So whilst over here it might be a position trade based on a swing trade, something you might get into in Asia, get out, and you might look for a swing trade, get in Asia, get out in New York. This one over here, at the daily swing, you might look at get in on a Monday or Tuesday, getting out on a Friday, that sort of trade, okay? It's all to do with the fractals and where we are. Likewise, if you came in and you go, oh, 4-hour changing trend, 4-hour chart changing trend long after coming off daily support, that also is another swing trade plan over here. I mean, it opens up all the, the fractals, trading along with the fractals and getting all your fractals lined up can be almost like a robotic way of looking at the trading. Now, Sai1 Borg, to answer your question, I look at, for me, I'm fibs, pivots, psych levels, role reversals, and things like that. Okay, so for example, I would, if I was trading this over here, if I saw this and down here, I'm looking at that role reversal line there. I'm looking at, say, a 50% fib. I'm looking at a central pivot, whatever's around there. And the more confluence of support in that area with my 15-minute change of trend, the more likely I'm gonna give that the long treatment and try and ride it as long as humanly possible. Okay. So you want well, 1-minute charts. The minimal chart I use GY is 15. I'm not a 1-minute fan at all. To me, that's I joke around with my class a lot about this right now. By the way, Boyke, I'll just put that big blue line on for you. I think you wanted. And if you got any questions about it, please feel free to ask. Why don't I like the 1-minute charts and stuff? Because you're basically scalping your way around. You're like in the trash can scavenging for pips. Not my cup of tea. I'm a 50 to 100 plus pip trading kind of guy. Did you just want that for a screenshot or something, Boyke, or do you got a question about that? We good? So, where else can this be beneficial? Well, it's good in terms of analysis and trade planning. By the way, I'll get the live charts or some charts out in a minute. We'll look at it in a more live environment with candles. But think about trade planning as well, or management, I should say. Let's say you take a long on a 15-minute change of trend, so a very small fractal time frame changing trend at support of this big rise here. So you're in open of London or something, so there's a bit of time of day, and there's pivots and there's a psych level and all sorts there, and the 15-minute chart's changing trend, bang, you take a long and off it goes. Okay, and then you come to Asia the next day, so this might be London. Then Asia the next day, they short it, but you've sort of got your stop at break even, just leaving it, just chilling, because you're hoping it's going to go and come up here somewhere. And then suddenly the 15-minute changes trend long again. So basically there was an attempt at shorting that failed here. The change of trend where I'm putting the line, it went long again. Well, that's an excellent place to take stop loss and move it. Okay? And then it gives you options, once it's reaching your target up here, then once you're you might just start tracking swings. So once you start tracking swings, boom, do all that sort of thing as well.